We are midway through August, and historically this is the turning point where a green August can turn red. Will we see the same this time? We will also have a look at ETH and the stock market because that could give us a clue where is Bitcoin heading next. And I found two charts I want to show you that are suggesting that the bottom may already be in. So before you are giving up on the bull market, you may want to see this first. So let's get into it. We were expecting that August would not go the way big YouTubers are suggesting. It may end up red, but it did start green. We were looking at 2022 and comparing it to now. And yes, while it's not quite the same and significantly weaker, we were still starting green. But this weakness opens up the question, if we couldn't pump here, why should we crash? There are not enough buyers to pump it, but are there enough people willing to sell here to dump the price? We could just go sideways here for quite some time longer, exactly as we did in 2018. We have been comparing this year to 2018 and 2022 for quite a while now, and so far 2026 is acting like a mix of both. We are staying around 60,000 like we did stay around 6,000 in 2018, and we are now at the same weekly resistance Bitcoin was in August 2022. Last time we did drop around this time in mid-August for 2 weeks. So is this what's coming next for Bitcoin? However, and this is what many people get wrong, we are still in a make or break zone. For the bear market to continue and the 4-year cycle to remain valid, we actually have to see a significant drop here. Otherwise, we could break through this weekly resistance and that would change the whole picture of the market. If you take a closer look at 2022 weekly chart, look at what happened exactly in mid-August. Not only were we at weekly resistance for the 3rd time, exactly like we are right now, but it's also happened around the same time in August. Last time we dropped for about 2 weeks into September, around 20%. Imagine we drop 20% from here over the next 2 weeks. That could bring us to around 52k. So let's assume we do the same thing like in 2022. What could we expect for the next 6 weeks? After the drop down of 20%, and this is important, we did not quite get to the lower weekly support. Instead, we had quite some front running. And also this drop marked a significant low for the rest of the bear market in 2022. And after that, we saw recovery in September. If we follow the same route, we can expect quite a drop from now on, at least for the next 2 weeks, probably not 20%. But if we see the same kind of front running before we get to the lower weekly support, we could expect a drawdown of around 10, maybe 15%. And this would be the bearish case. It's not only the bearish case, it's actually the most expected case right now, because it's perfectly in line with the 4-year cycle theory and seasonality. So it sounds easy, right? However, this is ignoring everything else that's happened in the bigger macro picture. And honestly, I don't think we should ignore that. We are so concerned that Bitcoin could go up or down. We are ignoring the third possibility. And the third possibility could be that Bitcoin just continues sideways. To come back to 2018, we stayed above 6k until late November. And this time, it is not even guaranteed that we get another crash catalyst that will bring us lower. We could simply stay sideways and have time-based capitulation based poorly on boredom. I mean, think about it. We are already a month in and Bitcoin basically staying within a 2k range. But why would Bitcoin not drop here? What could prevent a drop like in 2022? What could hold us up here? To understand why we might not drop here, we just have to look at the current stock market and also at commodities. And if we do that, we see quite some bullish price action. Gold, for example, broke through its weekly resistance and exploded higher. It might head it low in and continues higher from here. We discussed this accumulation zone weeks ago as a very nice entry zone. But why is the gold chart important for Bitcoin? It is somewhat important because commodities are still some of the most similar assets to Bitcoin. The same goes for silver. It also broke through its weekly resistance and is now above major resistance. While definitely more volatile, the lows for silver also could be in. And then of course we have the S&P 500 in an absolute crazy run and at all-time highs again. Now it's important to understand, what does this even mean? It means investors are seeing something that is bullish enough to continue to buy even at this higher expensive prices. And what could that be? I think it's the most obvious development we have in the last days. It's inflation data. Not only does come in lower month over month, it also means that the risk for a rate hike is reduced. While investors now still expect one rate hike in this year, If this trend continues and inflation continues to ease, we could very well see no rate hike this year at all. And I think this possibility is right now getting priced in. This is not bearish price action. Nothing seems to stop or slow down the AI hype. And this could even very well continue until the next year. Remember, a rate hike in September was my bearish catalyst. That was the event I expected to bring us lower. If we don't get it, honestly, it's going to be hard to argue any bearish case. So what does it mean for Bitcoin? We are running out of bearish news. The only major remaining risk factor is the US-Iran conflict, which could still escalate. But while there is no ceasefire, there is also no major escalation right now, and it seems to be more of a waiting game. Other than that, what could bring us lower? Instead, we have more and more signals telling us that the bottom may already be in. For example, let's look at this chart. It shows the net future positions of hedge funds, aka smart money. And they have been pretty accurate at timing the bottom. Hedge funds use future positions to hedge their spot position. That's why we mostly see shorts on this chart. They accumulate and protect their profits with shorts. So seeing them being long is quite a bullish signal. Not only they have spot, they also are confident enough to go long here. And right now they are quite strongly long. Doesn't mean we can't go lower, but it's quite telling that these analysts and larger players are positioned bullish. Even in 2022, when they were short, it was nowhere near as extreme as what we usually see around major tops. People always compare smart money to dumb money. Well, smart money is buying. And then we have this chart. This is the Bitcoin versus gold chart with the 200-day SMA. The last time Bitcoin reached the 200-day moving average and reclaimed it, it marked the end of the bear market. Look at that. It looks like we are getting closer to that area again. We just hit the 200-day moving average, reclaimed it, but now have fallen slightly below it again. So this is definitely worth keeping an eye on, because if Bitcoin reclaimed this level, it could be another signal that the bear market is coming to an end. Why? Simply because the moment Bitcoin shows strength against gold, we could see some rotation where money flows out of gold into Bitcoin. So as you can see, seasonality and the 4-year cycle would require us to continue dump basically now. The rest of the market is bullish and smart money is accumulating, so we cannot confidently say we will definitely drop here. We have to find the answer somewhere else, and maybe Ethereum could give us a hint. Now, I was never a huge fan of Ethereum, but even I can see some interesting developments here, and we just cannot ignore them. One of the biggest financial institutions in the world, BlackRock, and its CEO Larry Fink are increasingly bullish on crypto and potentially especially on Ethereum. Now I want to do more research into this, and I was thinking to do a separate video for Ethereum. If you have interest in this, let me know in the comments, and don't forget to leave a like if you have some value so far. But so far, Ethereum has broken out from its weekly resistance, and the ETH Bitcoin chart also looks quite bullish. There is a possibility that Ethereum could help push the crypto market and Bitcoin higher. Because tokenization becomes more and more important, the blockchain infrastructure behind it becomes extremely important and maybe is the biggest winner in the next bull cycle. And whether we like it or not, BlackRock is already one of the biggest players in the crypto space through Bitcoin ETFs. And because of all this recent bad news happening on all of these hardware wallets, more and more people will choose ETFs to get into crypto, which will just increase the importance of ETFs and BlackRock in the space. So could Ethereum become the major part of that future? Could Ethereum actually outperform Bitcoin in the next cycle? I wouldn't bet on it yet, but we should definitely keep an eye on it. So what does it mean for Bitcoin? For the 4-year cycle and seasonality to play out, Bitcoin would have to crash pretty much this week. Once we break below 60,500, only then we can start targeting lower prices. Otherwise, we can still expect more chop and sideways price action, which means right now we are more or less in a no trade zone, simply because we can pump back up on all these levels. And if we pump above 64,000 again, bullish momentum will come back and higher prices are still likely. Again, DCA is the best approach right now, and lower prices are a gift. I am buying especially on days like this when it's red. And if we see prices below 55k, I am happy to start low leverage long positions that I am confidently hold for many years. And that's it for today's update video. I hope I could give you some value. Don't forget to like and subscribe. And as always, thanks for watching, and I see you in the next one.